speaker Nitin Bhuta ji, who will be taking through the gold dichotomy and the conceptual taxation framework. As members, we will be aware that the gold price is rising around, say now it's 15,000, more than 15,000 per gram. It will go up to 1 lakh something is the market expectation. Let us see what the learned speaker has to say about that, and as a CA how we have to plan for our client and for ourselves. I request we will start to briefly introduce the speaker.
Welcome dear members for the second session today. It is a pleasant task to introduce one of the very expert and a senior professional amongst us, CA Nitin Bhuta sir. By qualification is a BCom Chartered Accountant and a CWA. I will come to his industry exposure during his training, as well as after he established his practice in 1992. He had the privilege of getting exposure to various industries like advertisement, entertainment industry, research company, pharmaceutical, nutraceutical, manufacturing industries, banking, celebrity management, medical fraternity, skincare, and wellness, and so on and so forth. He currently is actively involved in a limited scale of audits, direct and indirect taxation, management advisory services, as well as handling litigation matters for both corporate and non-corporate entities up to tribunals. Currently is actively involved in getting drafted legal documents related to business arrangements from a tax compliance perspective. His list of accomplishments is a very long list. I would like to highlight a few looking at the time that we have. He secured AIR 13 at the intermediate level in ICAI exams. He is a regular contributor to articles published in the digital domains, including GSTPM magazine, Tax Guru, CA Club India. He has been appointed as one of the members to represent ICAI in connection with the new income tax website version 2. He has been selected as one of the experts from WIRC on the direct tax committee of ICAI for the financial year 23-24. He has been appointed as a member of the Membership and Public Relations Committee of the Chamber of Tax Consultants for the year 2024 and is reappointed annually. He contributes regularly to and he speaks at a lot of events such as WIRC, NACIN, GST certification courses, as well as at various study circles in Mumbai and outside Mumbai on GST. He is one of the panelists on WIRC for resolving queries on 9 and 9C. With this brief introduction, I would like members to please welcome our second speaker. I would now request CA Vijay JM sir to please present a memento on behalf of all of us. I would also like Sandeep bhai to present CAPF along with the memento. Thank you for your time, sir. I would request you to please take over.
Good afternoon, friends. Let me begin my speech by thanking Borivali Central to speak and re-invite me and giving me an opportunity to speak on a topic which is, to my understanding, is not spoken on any forum till now. What I have done, I have consciously used the word dichotomy in the topic for the discussion today, whereby I propose to dichotomize gold as an investment on one side, and on the second side I have touched upon all the compliances that are applicable to the gold taxation as such from every law that is applicable. Once you see the contents of the program, you will know what I have touched upon. But let me tell you, there is a famous management trainer who said, speak only if you can improvise. And with this, let me start my discussion. Before I proceed further, let me tell you, I have been instructed to wrap up my discussion by 1:25 because of the time limits up to which this hall is available. So I have around series of 200 questions, as I understand. I will be trying to give as much as answers if I can complete. But if I can complete by 1:25, fair enough. If I don't complete by 1:25, I will close my presentation exactly on the dot. That is what I'm doing. So this topic essentially sorry for the distraction. Anyway, let me put the disclaimer first. Whatever I express is my personal opinion, and I may be 100% correct or I may be 100% wrong also. So you people are expected to read the law and then decide what has been discussed today is to the point or it is relevant for the discussion. Let me wish everybody happy Mahashivratri. And this is the coverage of the topic which I would like to touch upon. I will establish the foundation first, followed by the comparative table of the sections, because most of us are familiar with the sections of ICAI 1961. How many of you have really studied ICAI 2025? May I ask? I'll be asking the questions and I will seek the answer if it is possible, but I would like to ask basic question. How many of you have read the ICAI 2025? Nobody? So that's why there is a reason of reference which I have given in the discussion. Followed by the definitions, fundamental questions, capital gains implications, silver utensils, sovereign gold bonds, demonetization scheme, Stridhan, inheritance, search, seizure and investigation, unexplained family of sections, which is section 68 to 69D, profit and gains of business of a jewelry business, the insurance aspects of jewelry, GST law, customs, and then I'll be concluding. To think, to deliberate. It is a very good story. I went to a jeweler shop with my wife and we have bought a 5 tola of gold. And when I looked at the price of the gold, I was like shell shocked, because I never tracked the prices of the gold as such. But when I saw the price of the bill, I started wondering how an average person can manage the running of a show if he has got any family functions like a marriage or birth ceremony or any other occasions for that matter. Because usually on any of the occasions, giving of the gold is very, very common as a common ritual. So that prompted me to think, let us examine what is the topic, and as I started searching for the data that is available on a public domain about this, but unfortunately I could not find anything in the public space. So what I have tried my best to collect all the information that is available for the discussion. Traditionally, India is known as a Soneti Chidiya, and which is a factually proven statement, because the amount of gold reserves which India has, it is more or less equivalent to the GDP of India. So if GDP of India with the gold owned by the women clubbed together probably will be third largest country in the world. Third largest country in the world. And if I add gold owned by the temples, that is my estimate, we will be the second largest country in the world. So first being the US in terms of the GDP, second will be India, and China will be third. That is my estimate, but I may be subject to correction. This Kohinoor diamond was owned by us, now it is in the United Kingdom. We know the value of this particular diamond. Can this be valued today, technically today? Very difficult. What would be the price of a diamond as such? But let's take the example of a Taj Mahal or a Eiffel Tower or a Somnath Mandir. And if I convert all these monuments into gold-plated monuments, will it partake the character of a jewelry? That is a fundamental question. Or will it remain the monument? What is the view of the house here? I will expect some responses from the participants, if it is possible. Otherwise, I will straight away give the answer. To my understanding, it will remain a monument. It can never be treated as a jewelry at all. And it cannot be subject to tax under any circumstances. Gold is like anytime money. You can encash the gold at any point of time. Absolutely, one doesn't have to worry about. When we look at the gold, if an option is given to a woman and a man, woman will always prefer to buy a gold. That is my personal view. And whereas man will think something else. Typically, the value of the gold will remain stable or it will go up further. And what man has done, let's don't get into that. It is his choice. But if it is we all of us know the story of a Midas touch or a king. Whatever he touched, everything was getting converted into gold. Even he touched his daughter, she became gold. So gold, it's a good form of investment and it is a boon. But at the same time, if we don't do the legal compliances properly, we can have a lot of issues which we are going to discuss in the upcoming slides. So typically gold, when I bifurcate the term gold, it is a gold jewelry, which is the precise point of discussion. Precious ornaments, two or limited discussions we will be touching upon. Leverage, again, nowadays, most of the families who can't have a steady income, they are pledging their jewelries for the purpose of either marriage expenses or educational or medical requirements. So I have touched that angle. And the dependability of the gold increases substantially when the times are uncertain. That is my GDP. Typically, when I do, I already discussed, India GDP is underrated, which is estimated at 4.3 trillion as of today. It's an estimate value. But if I compare with US, which is 31.82 trillion, China 20.65 trillion, Japan 4.46 and UK 3.96. If I add gold, a woman and the temple, I am sure we are going to touch the second level. So these are the various forms of jewelries which one can hold, and every manner of holding the gold has got its own way of taxing the things. Believe it or not, India's gold reserve is equivalent to the gold reserves of the 10 different countries listed on the slide. So imagine the power of a gold India has, and if it gets channelized into the formal economy, what impact it will have in terms of our market, in terms of our country, and in terms of the well-being of all the taxpayers or anybody who is concerned. Because everybody has a gold, let's accept everybody has a gold in their families, which is disclosed, not disclosed, that is different. This is the price of a gold chart from beginning. It started as 1,670 and today it is 1,50,000 rupees for a 10 gram. And it's going to go up further, that is my personal. Sure, because most of the countries are shifting their investments into the gold or a metal. And that is why this rally of appreciation driving the metal market, that is my understanding. Because dollar as a convertible currency, people have started disliking it. Whether they like it or they don't like it. But it's happening. Sooner or later it will happen. Let us take an example of a person, a Sean Connery. I miss because it is in the Bond movie, but he is an Indian resident, it's assumed. And he has been earning a steady revenue of so many crores every year. And approximately 40% he puts into the jewelry. In any form. Considering his level of income, in my personal opinion, his owning of jewelry is justifiable. So there is no question of any addition, provided it is properly recorded in the books of accounts. No questions asked. But if we deep dive into his cash flow statement, we will be able to justify whether gold which he owns is justifiable. Take a contrary example, Bhagwan Dada. Look at his income. And if I look at his trend of the income, last year, last row, against his income of 30 lakhs, if he shows the gold investments of 25 lakh rupees, it is not justifiable. So cash flow justification is very, very important when we are discussing the gold part. Whether disclosed or not disclosed, that is one part. This is the references of the various sections which are relevant for the today's presentation. I have just tabulated based on that. I have tried to be as accurate as possible. Now look at the definition of capital asset. It starts with means. When I look at the definition of any definition, it starts with means. It is a specific definition for defining anything, which is a capital asset that has been included. But it said it does not include. When I say it said it does not include any stock in trade. So if it is a stock in trade, it will go into the profit and gains of business, and then we have to treat that as per section 28 to 44 of the Income Tax Act. But if it is not a stock in trade, then it will be a capital asset. Only exclusion that is provided is a personal effects. So if you can prove anything as the personal effect, then even though it is a gold, it will not be subject to levy of capital gains, because it is neither transfer of an asset, it is not subject to capital gains at all. Again, explanation is provided. Jewelry includes. Now again, an inclusive definition, it means anything and everything can be covered. It is only this. ornaments made of gold, silver, platinum or any other precious metal and any alloy containing one or more of such precious metals, whether or not containing any precious or semi-stone, and whether or not worked or sewn into the wearing apparel. So if it is a part of the wearing apparel, it will not be considered. So we got to decide from each of the aspects what can be termed as a personal asset, what can be termed as a capital gain asset, and then decide the tax treatment of that particular transaction. And this is the definition given by the Bullion Exchange. Just reproduce here for the discussion sake, but it has got nothing to do when we are discussing vis-a-vis the taxation aspect of it. First and foremost question, how much one can own gold? Are there any limits to own the gold? There are no limits. You can own as much gold as possible, provided you justify vis-a-vis your income and the sources of funds. That is very, very important. There is absolutely no restrictions on owning the gold at all. Whether the gold spoon can be considered as a jewelry. If you have a gold spoon but which you are using for a daily eating of your food, then it is not a jewelry but it is a personal asset, and there is absolutely not subject to levy of tax at all. Whether gold coins or gold or silver bars can be considered as jewelry, it is a jewelry. In the sense, it is a precious jewel, bullion. It is a bullion. It's not a jewelry actually, but it is one of the forms of a bullion. How much one can own? There is absolutely again no limit as long as we properly document. Whether gold utensils like thali, glass, cutlery, teacups, dinner sets can be considered as jewelry. If it is meant for an investment, then it is a jewelry. But if it is meant for a personal use, even if it is used for one day in a year, it is not a jewelry at all. And again, it is a personal article.
Sir, generally nobody uses this kind of gold.
Royal families use it.
But
Royal family uses, politicians use it. That is the fact.
every day. No, it's saying one day also you use. Why can't
One day use, for example, on a Dashera day, you decide to use.
Yes.
See, it can be good planning can be done.
Yes.
It's a planning. But it should be backed by the facts. Please be very clear. You can't say all of a sudden, okay, this year I have started using the spoon for eating. Okay? You have to consistently follow.
तो फोटोग्राफ ले लेगा डेट के साथ हर साल का
Better.
2-3 दिन का प्रूव करने
Whatever. Just keep it on record. Whether the gold ornament studied on the clothes can be considered as jewelry. It's a jewelry. Any kind of a personal effects made of gold can be considered as jewelry. Personal effect, if it is a personal effect, there is no question of to be treated as a jewelry. Whether vehicles molded out of gold can be considered as jewelry? No, vehicle will remain the character of vehicle only. So character of jewelry will not come. Whether the deity idol molded out of gold would be termed as jewelry? Answer is no, it will be a deity only. It has to be treated in that way. When the deity procession items like chairs, musical instruments or anything relating to the pujas, it is personal effect and it is not a jewelry at all. There are enough judicial precedents on this particular point. We are not discussing the judicial precedents because of the time constraint, but it is a personal effect. Stridhan received on a family tradition can be considered as jewelry. What is the view of the house? Sridhan is a jewelry, but Sridhan includes gift or any other things that are received on the video. It is a jewelry, but it is the sole property of the woman. Husband doesn't have a right on that property at all. Neither it is a HUO property. So that fact should be kept in mind. And woman has a power to file a civil and the criminal proceedings against the husband also to recover Sridhan. That is possible as per the law.
So, but now the index is not there, how is society there? Some valuation report.
Sir, it will come. Wait, no? Don't jump to any conclusions. Picture baki hai.
ये ट्रेलर है अच्छा।
Yeah, this is the beginning.
Yes.
Beginning of beginning. If the jewelry is recorded in the financial statements or a statement of affairs prepared by the taxpayer, will it suffice in the to defend against the additions in the tax return? Definitely, if you can record. But most of the people never record the jewelry in the financial statements at all. Ideally, we should recommend clients to recognize that as a jewelry in the balance sheet if it is possible. Very, very necessary. If I take a jewelry loan, whether such act of taking a loan would legalize my jewelry? Answer is absolutely no. It has to be backed by the reasons and the documentary evidence. It is how you have accumulated that as jewelry. Whether it is necessary to maintain and keep records of the jewelry purchased over the years? Most of the people don't maintain, but if you have maintained, it really helps if there is a search, seizure and inquiries. If it is an unaccounted jewelry, can it be subject to addition under section 69A? Definitely, but if you can prove it, then the additions can be brought. How much jewelry can be purchased outside India and brought to India without customs clearance? There are two parts to it. How much jewelry you can buy outside India? Again, no limit, but if you import such a jewelry through red channel and pay the custom duty, it is properly legalized, absolutely no issue. But if you want to come out of the green channel, then woman can bring in 40 grams of a jewelry which she is supposed to wear and come, and men 20 grams. The man is always 50% of the woman. Now, don't ask about the gold reserves. Women are much higher than every one of us. If anything is enumerated as a jewelry, is it subject to tax? Answer is absolutely no tax at all. Is any documentation required? Preferably proper documentation should be maintained. Can you give the jewelry as a gift?
Yes.
Is there any restriction?
56.
No, that is the, sir, that is another part, that is the taxation part. Is there any legal restriction to give any amount of jewelry to anybody? There is no restriction. 56 to 10 will come. So you can take the advantage, whatever is options is available under 56.
Relative no tax.
Yeah, so relative no. But do you document that transaction of giving a gifting? Do you pay 3% stamp duty? Or is it on a 5 rupees, 100 rupees? Nothing is done. Please document.
For inheritance also documents are required.
I am going to touch upon in the inheritance section. Wait. If you are reporting jewelry in ITR, when your income exceeding 1 crore rupees, in the financial year 24-25, earlier it was 50 lakh rupees. Is it good enough? Because many people don't even maintain the balance sheet. You just take the ad hoc value and report in the schedule AL. Is that enough? Answer is no. Whether valuation report will be approved, value can be kept on record, better to keep you have. Whether jewelry can be confiscated during search and seizure, possible, provided it is in excess of the limit specified as per instruction number 1916 of 94. we'll touch upon briefly on that part.
Freedom can be confiscated.
Three them cannot, but they do confiscate. But then you have to prove.
If you are able to subscribe.
Then you have to prove. Whether jewelry can be confiscated by the GST authorities, absolutely they don't have a right. First they have to go the immovable property, then bank, then any other asset. So jewelry they cannot touch at all. If gold jewelry is distributed as a incentives or a benefits, whether the provisions of section 194R would apply, it will apply. How many of you comply with 194R? Very few people. Planning. Alternatively, can it be termed as a perquisite given to a staff members? Possible. Section 17, that option is available. Whether old gold exchange can be subject to transfer?
Yes.
How many of you offer tax to such an income in your idea? Barter. Sir, barter, whether the same asset remains?
Value remains same.
Value not value. I am talking about the characteristic of a product.
Nature change.
Nature changes, it is subject to tax and it is to be filed in the return as the capital gains on the exchange.
Yes.
Please be very clear. The jeweler will give you purchase bill. And that is your consideration.
You are able.
That is your consideration. This is the maximum mistake done by most of the people. Whether same is required to be disclosed in ICAI? Yes. Whether the GST will apply? Answer no. There is no furtherance of business. It's not a supply, so no GST. Whether jewelry received on Hindu marriage is a personal asset or a HUF property? It is a HUF property. It's not a personal property of a person at all. Anything that you receive on the wedding is a HUF property for Hindus. Hindus includes Jain and all. If a HUF is distributing a jewelry on account of the family wedding, will it be treated as a partial partition? Answer is no. It is to meet the expenses of the family. HUF can incur such a cost. There is absolutely, it's not a partition at all. So there is no transfer.
There is no distribution.
It's not a distribution at all.
Correct.
Whether any other assessee can own the jewelry, there is no restriction. Any person can own any amount of jewelry provided you pay the tax out of taxable income. Whether investments made through gold ETF or silver piece ETF are subject to tax, they are subject to tax, but there is no security transaction tax payable, so it is payable, tax is payable based on the long term, short term, as per the threshold of the limit specified.
No GST.
It is a security, so security is not a supply. With the gold received on conversion of SGP is taxable. With this finance bill 2026, it is taxable due to certain conditions. When we touch that section, we will explain. Whether a jewelry can be distributed by way of a will, possible, but in a will we recommend to write specifically what we are distributing in terms of the weightage. That really helps if that is the case. Whether the jewelry kept in the locker is the property of the locker owner or the nominee of the locker. Typically the owner of the locker will keep his jewelry. So he is the sole owner of that particular jewelry. Nominee is only the facilitator. He is the custodian of that particular jewelry. If anything happens to a locker owner, then he will transfer as per the will or whatever the documents that are available. But if the housemaid or a driver gives you a jewelry to keep in your locker, is it your own jewelry? Answer is no. But please record such fact for the documentation purposes. Let us take a hypothetical example. A non-resident is coming to India and we do some medical emergency. He is selling the gold for 55 lakh rupees. Cost of acquisition, let us assume to be nil. He doesn't have a PAN number. Since he has sold 55 lakh rupees, is he required to obtain the PAN number? Question number 1. Under two scenarios, he is not a citizen of any country and he is a citizen of US. If he is not a citizen of any country, then PAN number will be, because income will be subject to tax in India. And he is a citizen of US, then double taxation avoidance treaties will come into the picture. Further assume he doesn't have a valid passport. It's only a hypothetical scenario. Nobody can travel without a valid passport anywhere in the country. You get in by the illegal means in the country. But he has a valid passport but doesn't have a TRC. Then what happens? What can be done? TRC, with the recent judgment of Tiger Global and Ebony Bansal, has to be seen very, very minutely. Whether he needs to file 10F in India, if he has a PAN number, he can, or without PAN number also 10F can be filed. Since he has sold the jewelry of 55 lakh rupees, is he required to be registered with GST? Intention is not to do the business, so there is no question of GST registration at all. But moot question is, can he sell a jewelry of 55 lakh rupees in India? Answer is absolutely no. If he has declared in the customs, he has got a jewelry of so and so value, then he has a reprieve. Otherwise, he doesn't have an option to sell that at all. Absolutely not possible. Transfer, exchange or buyback. It is a transfer subject to capital gains tax. You are doing a melting of jewelry and converting into a new jewelry, then there is no sale. You may be adding few grammage more. It's a new jewelry. But melting here, there is no sale. So as per Indian Contract Act, the sale is not completed, so there is no transfer at all, not subject to tax at all. If you are pledging, again, ownership remains with you. It is not subject to capital gains. If, again, not considered as a transfer, 56 to 10 implication definitely applies. Family arrangement, again, is not a transfer and not subject to tax at all.
Sir, melting in exchange, how will you be able to substantiate that? If you have done
They will say, the jeweler will say, you have given the old jewelry which has been melted and used for the new making a new jewelry. There is no sale, there is no purchase fee. He does not buy that jewelry. That's the way it is to be treated.
that can be planned that way?
Plant, see, it is a genuine case. Okay, I don't want to sell the jewelry, but I would like to melt my jewelry.
And make something different.
Yes.
So, where we exchange, that way.
It's not an exchange.
That way can be planned, that's what I'm asking.
One may look at it. One may look at it.
Yes. If jeweler should agree.
Jeweler will not agree because of the PMLM procedures. If it is a short-term capital gain, it will be period of holding less than 2 years, subject to tax as per these slab rates. Cost to the previous owner can be considered if it is acquired in that means. Long term more than 2 years. Fair market value is on 1st April 2001 can be substituted. Cost to the previous owner. Taxable as per threshold. This is 12.5%. No exemption under section 54F for short term. But for long term, if the conditions are satisfied, it is possible. Disclosure option, wherever it is possible, you should disclose it properly. GST, again not applicable at all, because it is a sale of a capital asset. So no question of, if it is meant for a business, then it will go under the business income. Most of the silver utensils are always termed as a personal defect. So consequently not a capital asset, not considered as a transfer, not subject to tax, demonstrated by facts and figures. Like a royal and high net worth, they can say we are picking in the silver items. But the ordinary person can never claim that. But few of the silver utensils can be treated as a personal defect. Decorative pieces again cannot be termed as a personal defect. Precious stones, if they are affixed in the silver utensils, then that cannot be considered as a silver utensils because of the explanation given to section 214. Gold thalis possible. Gold plated silver utensils possible. Jewelry can be any numbers, but it has to be reasonable as well as genuine. Circular number 1916 says a married woman can own a jewelry of 500 grams, unmarried woman 250 grams, and male 100 grams. But if you are having a jewelry more than that, and if you can prove, demonstrated by the facts, then no additions will survive at all under any circumstances. There are judgments in favor and against the favor in case of the silver utensils. So all has to be studied basis the each individual fact. Don't ever take any decisions without studying the judicial precedents. That is the thumb rule to be followed when you are handling the taxation of a gold, silver or platinum and anything. Typically, this was issued by the ICAI and intention was to reduce the physical demand of gold and to reduce the foreign exchange so that current account deficit is reduced. It is designated 1 gram is equal to 1 bond. Maximum limit for a SGB is 4 kgs. It can be for every family member, major or minor put together. And trust can have maximum to 20 kgs and that is applicable for each year. Resident person can buy with his PAN number. NRI can be nominee but he cannot buy it technically. But even if on account of some reasons SGBs are transferred to NRIs, then interest cannot be repatriated back to his country. That is not allowed under the scheme. That is a restriction. But if you are gifting, then 56 to 10 definitely comes into the picture. It is a substitute for a physical gold, but it is not a gold at all. It is only a designated security in the electronic format. Interest is payable at 2.5% and it is subject to tax. It is not tax free at all.
When you say per year,
Per year, SGB. Up to 22nd July 2024, if we are transferring before maturity, it is taxable, and after 23rd July, it is also taxable. But up to 22nd July, indexation was available. After 23rd July, indexation was not allowed at all. But Finance Budget 2026 has said, if you have bought from the market and you are getting the maturity, then it will be taxable. That is the only difference that has happened because of the SGB, otherwise there is no change at all. If you are owning original subscriber and you are getting the money on the maturity, it will be taxable. Interest is taxable even otherwise. So that remains, be clear on that mind. Again, there is something called gold demonetization scheme, which includes gold coins and bars, but exclude diamond and precious stones. Again, it is not a capital asset. Interest is paid, and only option is available to convert it into a gold. But that interest is exempt under 1050, and it is not considered as a transfer at all. What happens is you will be rendering the gold and that will be converted into deposit schemes. Object is more or less similar. and you have an option to keep the fixed deposit interest, short term, mid term, long term, depending on that whatever the rate of interest is applicable, subject to taxation. No, it is tax free, sorry. Typically, this scheme is used by the trust, temples, churches. Individuals, very limited use, but the limit is minimum 30 grams, upper there is no limit at all. But only drawback of this, you have to explain the source of such gold in this particular scheme. One question to everybody, whether the Stridhan is introduced in UK first, or Roman first, or Indian. Stridhan is concept introduced by India to the world. UK and Romans have followed Indians. Please understand this. It is a sole property of a woman. It is never transferred. And there are judgments on this effect by the Supreme Court. She can file the civil suits or criminal suits. But Punjab High Court has given the diagonally opposite decision to that. It belongs to an husband. But that is not a guarantee. Stridhan, it's not only at the time of wedding. If she said from the by a will of her parents, then also it is a Stridhan. And on wedding, it can be from anybody. And it is for every wedding that happens, not one wedding. There are multiple weddings, then every time she can get a Stridhan, that is possible. If it is consumed for the family requirements, then it is not a transfer, not subject to tax at all. If compensation paid, then again also it is not treated as an inadequate consideration, not a taxable at all, under 64. If invoices are not available for Stridhan, then also it doesn't matter, but you have to prove with the photographs. Whether the parents' income proofs are required, answer is no, it's not required. If it is available, good, it helps, but technically it is not required. Declaration provided by the family members would suffice considering the passage of time. Yes, it will suffice, like testamentary document or a confirmation. If Stridhan is confiscated, suit can be filed under Article 300A of the Constitution for the recovery of the Stridhan by the whom. That is possible. Instructions 1916. Even though it is provided, Stridhan technically cannot be touched upon. There are a couple of judgments on Stridhan which are favoring Stridhan, whatever the principles that we have discussed, that holds. But Supreme Court judgments are more better, or High Court judgments, than tribunal judgments. There are unfavorable judgments also. Good questions. Whether inheritance would be termed as family settlement? Is it a family settlement or is it not a family settlement? Why?
Inheritance generally one gets from the death of person.
Death of the person. But is it a form of a family settlement? That is my question.
We do not dispute. It's like we cannot say that.
Pardon?
Not arising out of dispute.
It is not arising, but I can plan the inheritance in such a way whereby the family disputes are mitigated. If I write in my inheritance statement that so and so should be given to so and so people, is it not one of the forms of the family arrangements? On inheritance, no taxes payable, that is very clear. But it is one of the forms of family arrangement. Family arrangement we execute when there is a dispute. That is truth. But this also can be one of the form of family arrangements. any kind, any value, any quantity, absolutely no restrictions. Cost of the previous owner is available, and even 1481, there are enough judgments available on this point. Indexation up to 22nd July, after 23rd July, no indexation. Holding period from the date of acquisition and the purchase by the previous owner, 87A rebate is not permissible. Whether testamentary document required to be registered? Answer is, if it is done, good. If not done, it is not compulsory. Can it be typed? Not necessary. It can be handwritten also. Whether it can be legible reading? That also. If it is illegible, then also it is fine. Absolutely no worry at all. Whether the valuation report helps? It definitely helps. If any variation posed because of the melting in the change in the jewellery, it helps. Questions cannot be asked. Reflections in financial statements is necessary. Probably if you have the value quantified on the valuation deal on inheritance, that can be capitalized by our credit to your capital followed by the debit to jewellery account, which we follow. Whether mere polishing would pose any challenges? Answer is no. Family status definitely matters. If you are from well-to-do family, it can be justified. Frivolous questions, support addition, answer is no. Supporting bills needed, provided you should, ideally one should maintain the bills if it is possible. Very, very important, if you are inheriting any jewellery through will, opening of the will should be done within a reasonable time. If you open after 6 months, then it can be challenged. There are people who have opened the will after 6 months. There is possibility that will was there which was never available, nobody knew it and it came to a notice. But again that is to be proved by the fact. Ideally, will should be opened as soon as possible after the last rituals are complete. There are judgments, rate judgments, they are opposite, given on the adverse manner, and what is written in the plaque, they are positive. How do you justify the inheritance? Invoice copies, preferable, tax returns filed, specific mention in the testamentary documents, quantity if possible, gift dividends, gift deeds and so and so, valuation report, photographs, insurance. Very practical solution. Take a general insurance, specify all your jewellery into the insurance policy. That can be the one of the support document that you can have. Pound gold during emergency can be also supporting you. Leverage documentation, if you have taken a loan, possible. Any other documentary evidences. We will be using the word SSI as a common. If there is a search, seizure and investigation in your house, and if the jewellery is found, can you plead the ignorance? Answer is no. You can't plead the ignorance at all. Unless and until it says that you acquired a new house and during the demolition or repair work you found it. That is possible. Depreciation and value, the addition cannot be done, only on the actual cost additions cannot be done. Possession of money, bullion, jewellery, valuable articles or things that represents wholly or partly income that is not disclosed in the idea, additions possible. Non-responding to summons, scan, triggers, search, seizure and investigation. So if you are receiving summons under any law, please kindly attend to it, never ignore summons at all. Whether NRI can be subject to search, seizure, investigation, possible. Whether person can be subject to imprisonment for the non-disclosure of gold, answer is no. Arrest is possible if you have a history of absconding or serious crime and investigation. In that case, arrest is possible under the search investigation. Or if you have a history of tampering of evidence, then possible. Powers of the assessing officer. He has a tremendous powers in the search, seizure and investigation to enter and search everywhere relating to any of the property that a person owns. He has a power to break anything. If the keys are available, please give the keys so that they don't break anything, so that it mitigates the damage to the property. He has the power to search every person coming in, going out of the house during the search. Whether power to seize is embedded in during the SSI, answer is yes, it can be possible. Whether warrant copy, it can be asked by the taxpayer during search, seizure and investigation. Can you ask for the warrant copy for your records? No. You can see it. You can see it, but you can't ask for it. That power you don't have. He will show it to you by default. Whether examination under oath is possible, it is possible. Either senior officer can be contacted during the search proceedings, can be contacted if you are getting trouble with the local, their investigation team, you can ask for the records. Very, very important. Proper application of mind should be there in terms of the writing to initiate the search, seizure and investigation proceedings. Can survey be converted into SSI? Possible. Well tax returns not filed after 1st 492 because of the wealth is below limit of 15 lakh rupees. Whether claim of ancestral property would survive, it will survive if it is proved beyond a doubt.
Sometimes the wealth tax returns are abolished now.
Up to 15. Up to 15 only it was there. That was not there. But if you have the evidence, then it really helps. Hold. We, as a policy, we never destroy any revenue records at all. We always keep every record. Either scan copies, but it is there on the file.
But better to take valuation for maybe 3 or 5 years.
Yes, you can. Valuation report will come, definitely. Reasons to believe, all of us are familiar with the reassessment proceedings, but the same logic applies to exercise also. It cannot be just done for a frivolous reason. Seizing possible. Either loss due to confiscation is allowable loss for stocks not recorded in the books of accounts. It is possible because if the stocks are confiscated and they are lost, and it is a genuine loss, it is a business loss, taxation of the treatment of the undisclosed stock in trade, and that is a different thing altogether, but it is possible. They do see, but then you have to go for the Article 300A. Possible. They do it. We can object. If jewelry is owned and proved beyond time, whether same can be retained during SSI? No. If you can prove jewelry with all the invoices, with your returns and bank statements, it cannot be taken. If return of income details are provided, then again it will help to drop the additions. If local key is found at some other person's house, even that person's house can be searched. That is possible. Same way, if records are maintained in our offices as a chartered accountant, our office can also be searched. If it is related to profit and gains of business on the office. Whether affidavit can be signed on oath, it can. Jump in valuation of ancestral property cannot be the reason for starting the SSI. Whether assessment proceedings can be reopened, Search, seizure and investigation is a block assessments typically. But if they have the information of who are in possession of the property and the search is not carried out, then reassessment proceedings can be taken. If quantity matches with all family members, there is no question of any addition at all. Addition under force, coercion or any other means would sustain. Answer is no. Whether statement taken under force can be revoked, can be definitely be revoked, but it should revoke as soon as possible. After 3 months you go and revoke, that does not help. Whether loose sleeps without any details would result into addition of unaccounted. Loose sleeps cannot be subject and can't initiate the addition at all. It has to be proved factually.
But they create a lot of pressure.
They create, see, those are all pressure tactics. But there are enough judgments to say that loose sleeps cannot be the only sole reason for making the additions. Enough.
That's the usually because they understand something like that.
There you have to retract, you have to manage them with the facts. Whether the written statement supported by the facts can be stated in the assessment proceedings, yes, it can be. Karigan can claim a loss of gold confiscated belonging to his client. Karigars, that is job workers. Can they claim a loss of gold? Karigars, can they claim a loss? Answer is no, because he is not the owner of that particular property at all. He cannot claim, but the owner can claim. Family traditions, rituals, social status helps in defending the accumulation of the jewelry in SSI proceedings. Jewelry kept by the housemaid, tribal servants counted as a jewelry of the assessee? Answer is no, but whenever they give you, please record that statement for the internal communication purpose. Typically, first 4 sections that you look at 68, 69, 69A and 69B, it refers to a books of accounts. If you can prove, addition does not sustain, but if you don't prove, additions will go. Another section is unexplained expenditure, 69D, which we are not concerned of today's discussion. But how many persons are required to maintain the books of accounts? Specified persons and the business people. Not every taxpayer, salaried employee and all is not required to maintain the books of accounts. That can be argued. Preferably, if it is possible, we should recommend to clients to drop the financial statements or the statement of profits. Do charge to the client, but it is recommended. That is high net worth individuals. FA, if you have filed 61A, would it help in dropping the additions? It will definitely help. If you have disclosed the sales about 2 crore rupees in 61A, it is possible. To defend any investigations on account of the unexplained family of sections, proper explanations, documentation and evidences is the savior. They cannot touch you if you have documented properly. And this is the chart of the penalties that is available. But today, there is a voluntary disclosure that is available indirectly in the Finance Act 2026. But be wary. You got to be cautious about the PMLA and the GST implications. These are the some judgments. Profit and gains of business. Very, very important. Jewelry has to be hallmark, that is mandatory. These are the various requirements, but when you are doing the audits of the jewelry companies, do a turnover reconciliation with service quantity, weightage, and making charges collected and paid. You will find definitely leakages of revenue invariably. And 285BA reporting is a must. There are some judgments in books of accounts to be maintained by the jewelry. Person is starting a business by mortgaging his own jewelry or family jewelry. Does it income tantamount to income subject to tax. It is a borrowing, so no question of income. Does it mean jewelry is legalized? Answer is no. Does it tantamount to explain investment disclosure for IT purpose? Loan comes from the financial institution, so it can be disclosed. There is no question. But individual person, jewelry can be subject to tax. Valuation report will say, well, such borrowing needs to be reported in the tax audit report which is from NBFCs. Interest payout on subject borrowing subject to TDS if the tax audit is applicable, or if the turnover is beyond the limit specified, then the TDS will apply. Garnish proceedings can be initiated for the recovery of tax dues. For a jewelry companies or lending institutions, license is a must. KYC authentication is a must. Can the disbursement be done in cash? Answer is no, only check. But the lending institution needs to verify the compliance with the income tax law of the borrower. Answer is no. If institution feels it's a case of money laundering, then he is supposed to report under the PA. Interest earned will be PGBP, not the income from other sources. Provisioning of bad debts is permitted. Licensing institution needs to comply with garnish proceedings. Yes.
Yeah, but when you pledge the jewelry, do they ask the proof that you own it? When you take
They don't ask.
no.
No. They will not ask. Mutha's father, they will just give you disbursement within 1 day. That's it.
Do they have to report such transactions to you kind of
No.
against pledge of
No.
they have lent?
No.
No reporting of that.
Whatever the transaction that is reported of the lending, that is the only reporting. Because there is nothing.
Yes, or something, there is no reporting, no?
It is all banking channel. Gold particles in the form of a wastage are given. Typically, carriers are paid as per 190% of work contract, and we issue the TDS certificate. But gold particles are never recorded in terms of the consideration paid. If that is included in the TDS, is applicable. Or if it is a salaried employee, then 192B will apply, then TDS will apply accordingly. Or if it is a 194R, then TDS applies. Consequently, you have to report under the tax audit, and you have to decide whether the tax audit report is correct or not, and whether clause 34 of form 3C gets attracted. If a partner is introducing the capital, then 45(3) will come into the picture. If it is withdrawn, then 45(4) read with 9B will come into the picture. If the remuneration is paid in kind, then 194P will apply. And then consequently you have to treat the taxation accordingly. With the finance bill, if Ind AS becomes compulsory, how many of us are capable of reading the Ind AS balance sheets? That is the larger question which all of us has to be prepared, and it's a good opportunity to learn. For each one of us, we should learn how to make our Ind AS balance sheets. Sooner or later it is going to happen. Your accounting standards are going to go. ICBS will also go.
Currently, it is not mandatory.
As of now, it is not passed only.
250 crores net for that, right?
Yeah. Quantitative reporting in 3CD has to be done. Insurance, bank borrowing, appropriately to be reported and correlated. Monthly deposit schemes, every jeweler is operating. Whether you report under the tax audit report, according to me, it has to be reported. On repayment, 269 ST will get into the figure, and that has to be reported.
But it is advanced because again that scheme normally need to purchase.
It is last for use or otherwise. So, or otherwise is wide enough to cover These are the definitions given under the bullion law, which are not insurance. Very, very important. If you take an insurance policy and if you quantify the jewelry of our family, and if it is lost, you get the compensation at the current market price, and that will be subject to taxes or capital gains. And that equally same thing applies to the business houses also. But again, everything has to be properly proved.
Oh, it will be separate policy, household policy where you declare various-
Household policy will serve. There is no separate policy for jewelry. No, it's a household.
where you declare different.
Yes, but do declare with the list properly. That is the best thing to do. Very, very, very important. If you are taking a jewelry for visiting your customer, there is a theft during the transit. It is a business law. If you are taking the inventory home for counting, then and it is lost, then also business losses are allowed for under the business income. But you have to support with the cooperatives documentation. Bullion on sales 3%, but if you are buying bullion 3%, ITC is admissible as per section 16. If you are selling jewelry, rate is 3%. Installment scheme on sale, completion of a sale, you pay 3% GST rate. On approval within 6 months, after 6 months, you pay the 3%. That is what the scheme is. ITC can be claimed as per section 1670. Refund can be claimed or inverted duty structure can be claimed.
In case of melting, it will be additional gold.
You add additional gold in melting.
So on that only, yes.
Obviously, there is no sale, no?
Melting.
Labor charges. Shop workers, they will charge at 5%. ITC is admissible, they will report in GST or 1 and ITC 0 for fighting has to be done. There are a lot of import benefits are available under the customs as well as the FTP that can be availed by the diamond industries. But diamond industry is in a big doldrum because of the late grown diamonds.
So on making charges also GST is 3%.
Wait, I'm coming. Composition dealer, 1.5 crore is the limit, they will not get ITC, they will issue bill of supply. Manufacturers and trader will pay 1% on the taxable turnover, not on the total turnover. Gold 3%, uncut diamonds 1.5%, silver 3%. Purchase from unregistered person, no RC. Karigars will charge 18%, repairing 5%, new gold addition during repairs 3%. Reverse charge mechanism, legal fees 18% with ICM, security charges RCM 18% with ITC, rent a cab, no. Gifts, disposal of an asset, then the GST rate will apply. ITC reversal under block credits. But it is a sales promotion, then ITC is admissible. But again, documentation. If it is a diamond, if it is a jewelry, then it has to be categorized under 7113, not under 9101, even if it is a watches. Various GST litigations are there, but most of the judgments are the authority of advance billing that is binding only to the taxpayer who has applied, not to everyone, but it is a reference value. For want of time, only 10 minutes are there, so I am just would like to touch upon everything. But if you are receiving a notice and if you have not responded, then only option is you have to go for the appeal. Margin scheme is not available to the jewelers at all. Because if there is a change in the characteristic of jewelry, then margin scheme cannot be. But if there is no change in the characteristic, margin scheme is available. If you retain excess vessel, then it is a supply subject to be treated as a consideration. You have to value as per section 15 and pay the GST accordingly. If inputs are returned for output, then ITC is admissible, there is no question of disallowal. Very, very important judgment of PAR. Settlement of book debts by book entries does not require reversal of 37 and 37A. So it can be applied to any other business transaction. If you do a cross transactions, buying and selling within the same concerns, this option can be given. Kalyan, if you are giving a voucher, then 12%, but if you are giving a gift card, rate of GST is 18%. If it is a derivative contract, it is security out of GST. If you are depositing the diamonds and getting the EVR, again it is not a supply because there is no transfer. But if you are converting EVR into diamonds, then it is supply. E-units are always treated as security, which is not a supply at all. Fire asset testing is a job work subject to tax at 5%, not 18%. Customs. These are various definitions. The valuation rules of customs are more or less aligned to valuation rules under the GST. More or less aligned. Personal free allowance 75,000 rupees or 20,000 for the others. Laptop or a personal electronic item, one can be bought without payment of custom duty at any point of time. Jewelry 40 grams, 20 grams. For a non-resident that is not allowed. But if you are holding the work visa outside the country, then you can bring 20 grams in gold bars or silver bars. But as a taxpayer, you can't bring in gold bars and silver bars. But if you pay the custom duty, it is allowed.
How much is the custom gold bar?
I am not aware about the details, so I don't want to make a comment. If you do a smuggling, it is subject to tax under the customs. And everybody is familiar with the judgment of PRSC. All of us must have been barred during our CA course. It is allowable as a business deduction. If show cause notice is not issued within 6 months by customs, then they cannot retain the goods at all as per the custom code. Let me conclude. Whatever we have discussed today, it can be applied to all the kinds of the deposition that we have discussed or any kind of a jewelry or silvers that we have. Whether more clarity is required, it is definitely required. I wish if there is an amnesty scheme of gold disclosure comes into the picture, we should convert into a formal disclosure to the economy, and by consequently GDP will go up. I wish everybody the Kohinoor diamond, Sone ki Chidiya. But to conclude, there is a famous Persian poet who said, God's language is silence and rest everything is a bad translation. Thank all of you for listening to my bad translation of the topic. I hope each and one of you have picked up the gold nuggets, wisdoms, points to help your clients. Thank you.
Thank you, sir, for the wonderful question. Anybody has any questions?
Yes.
Whenever you exchange a gold, in India it was Sridhar, so not taxable. Sridhar you given, then you...
Sridhan, when you inherit, whenever the liquidation happens, see if the Sridhan is used within the family requirements, then it is not a transfer. But if you liquidate,
Liquid says I exchange it. Sridhar I gave. Exchange new jewelry against that. Then
no. If it is an exchange, then it will be subject to tax.
a family function is there, daughter's marriage is there, right? If Sridhar gave, and we bought new jewelry.
No, it is not
It's
possible.
for family purpose.
No, that is not permitted, sir. Otherwise, everybody will start using that route.
Then reason and otherwise there is no purpose.
That's the law is. Law is like that.
You know, making charge is asking question on when we buy. Same 3% GST on making.
Making charges 5%.
But only jewelry.
If it is the gold plus making charges one lump sum bill, then 3%. Composite supply 230 will apply.
But they show breakup. Making charge is so much, metal then
That is technically speaking, if it is a composite supply, principal supplies of a gold, then 3% will apply. If it is, they give you only making charge bill, it will be subject to 5%.
even though those show separately, it will be 3%. Composite.
Yeah, it's a composite supply definition.
Semi-precious precision, what is the rate?
1.5%.
Diamond, same.
1.5%.
Any other questions?
Thank you.
Thank you, sir. There is no other questions. That means they have understood each and everything what we have told them. And
There is a one more thing that could have happened. Everybody is hungry to go for the lunch. So no questions to be asked. And I finished in time what I was given to me.
still 5 minutes are there, sir.
No, it is a 2 minutes, no? Indian standard time is possible, plus minus.
No, but it was so in-depth analysis, so no questions are there.
Yeah. Thank you.
Now I request Sandeep Shah to propose a well-deserved vote of thanks.
Sir, the class को reason तक कर क्या सकते हो? You cannot
We'll discuss offline.
Thank you, CA Vijay, and good afternoon, members. It's my privilege on behalf of the study circle to thank Mr. CA Nitin Bhuta for taking the time to share his expertise with us today on the new topic, gold dichotomy, taxation framework. His presentation was super informative and he broke down the complex topic with the ease and the interactive question answer form. He has explained the fundamental question on what is treated as a gold jewelry, capital gain on a taxation, gold, silver, precious stone, taxation of inheritance, search. He has also covered the GST matter. He has also touched upon the custom part and also touched upon the judicial petitions. The question answer session was really helpful to them. Thanks to CA Bhuta for making it so engaging. I would request all the members to join me in thanking CA Nitin Bhuta for giving the contribution.
Thank you.